What's up, everyone? Crazy trading day today. 5 different setups triggered, all provided beautiful trades that we took in my Discord. I also want to break down some market context and go over some key points to better read the market, along with some psychology tips to get a better understanding of market direction, up or down. I'm also going to go into a couple of trades that I took. If you are new here, be sure to hit that subscribe button. And if you want a very good trading resource, I definitely recommend you to follow my Instagram. I will link this in the description below. I post daily trading recaps on here, along with very good trading tips and tricks. Link to this is in the description below. You're definitely missing out if you aren't following it. Now let's get right into the video. First, we have to get some market context. And what I mean by this is to understand the auction process in the market, understand the common theme that the market is currently telling us between buyer and seller participation. Now, every day in the pre-market plan of the Discord, I post different setups that I'm watching, along with some key supply demand imbalances and some key areas that I'm interested in playing at. Here we had the NASDAQ, and I trade the QQQ chart off of this, as you all know that. We said that I had a test into the key 14539 and 14483 demand should get defended by responsive buyers. And if so, with valid confirmation, I will look to play QQQ calls. We had supply above, and if we slice through it, we had more potential to the upside, targeting the 14797 supply zone. Now, once we have our levels planned out before the market opens, it's very important for us to get a good sense of direction of the shorter term context to understand the auction. Now, the past week, going into the start of this week, we have been seeing some decent selling activity. We're consistently making lower highs. We're getting some nice sell-off days, and everybody and their mothers are thinking that the market's going to correct. We're super bearish, which it is possible. However, I'm a day trader. I only care what the market is giving me right now. I have no bias. I have no opinion. I just do, and I'm reactive to whatever the story that the market is currently telling me. So if you were to look on a daily chart, you could see that this uptrend is still intact. We have a normal pullback currently that keeps getting bought up. Every dip we've been seeing ever since COVID has been getting bought up. Buyers are buying at lower prices, and sellers are really not aggressively selling at higher prices. Now keep in mind as well, the market will move down until no more sellers, and the market will move up until no more buyers. So as soon as we throw some supply and demand imbalances on here to get more context, we could have seen that yesterday we sold off pretty aggressively, and demand zones yesterday did not work out so well because of either sellers were aggressively continuing to hit the market or buyers were not willing to buy any lower. Then the market closed, we moved up overnight, and then this demand imbalance from the pre-market plan at 14539 was a key reference area for us to hold, and if we came back to test it, for buyers to be responsive like they were yesterday. The market comes down to effort and reward. Who is showing effort and who is getting rewarded? The participant that's showing both is going to be where the market heads, and it's going to continue in that direction until there's no more effort and there's no more people buying or selling. So overnight we had the supply imbalance. We hit the supply zone, and if we go to a smaller time frame, when the market opened up, we sold off right into this demand zone. And again, everybody and their mothers, I was seeing it in different chat rooms. I was seeing it on CNBC. Everybody was super bearish. And when I see that, a red flag goes off in my head. I got probably 15 messages on my Instagram yesterday about what do you think about swinging SPY puts tomorrow or swinging the NASDAQ puts. And honestly, I said I don't think it's a good idea because anything could happen. The market could gap up. The market could also gap down. We could sit sideways. And it's important for us to not have a bias. And it's important for us to put a trade on with a valid thesis. When everybody's super bearish, personally, I have to be bullish because the market is designed to trick majority of retail at all costs. So when I see everybody on one side of the market, I'm kind of an outlier and see where ways that these participants could get screwed, where they're stopping out, because that's where I'm going to have the best setups. So the market opened up and we aggressively sold off in the first 15 or so minutes. Pull this up here. Right into this demand zone where immediately we caught a bid. Very heavy buying. Haven't seen this in a little while like we have seen in other markets. But the highest volume of the day came at this demand zone. It was showing signs of absorption to the downside. When everybody has the same picture like this and they think the market's going to sell off, not knowing we're in a demand zone, it is a recipe for a reversal. We immediately started moving up. I know a bunch of members took this long. And in the intraday commentary tab, pull this up here. I was saying I'm watching for a pullback into the 14560 to 14540 area to get bought up by buyers where we could look to play QQQ calls. Pull this up here. Would love for NASDAQ to pull into the 560 to 40 area to potentially play QQQ calls. Strong 30-minute and 1 hour lower wick indicates responsiveness. I want buyers to respond the same way if price pulls back. Now, this was in this area right here. This is technically not a demand zone. It's just an area that I wanted buyers to defend and show effort in defending it if they could get a reward to the upside. They responded, and if you go to a 30-minute chart, we had a nice lower wick here, a nice lower wick here, and these QQQ calls, the 356 calls in 6 minutes. Go to 1 minute now. As soon as we hit the supply zone, if you took it long at this demand around 10:14, went from $1.38 to $1.78, 30% in 6 minutes. Now, if you held from this entry into the next supply zone, these went up to about $2.70 for 95%. And by end of day, these absolutely ripped to $4.50. So the key takeaway here is if everybody is super bullish, you have to be bearish. And if somebody is super bearish, you have to look when to be bullish. This was an all-day runner. And like what we've been seeing in the consistent market, dips keep getting bought up. We keep flagging. We keep creating demand along the way up. And we're slicing through supply. Very strong market. Sellers are not there today, which is a little different from what we saw yesterday. Trade that I took was on DOCU. Now, I normally don't watch this name. However, a member brought it to my attention, and the setup was too good to not post and to not take. So we had a key level at the 293.61 area. I was watching for a break above to play calls. We had a very large upper wick, and when we see something like that, it tends to get filled and to test the same sellers who showed the responsiveness the first time. So the key level was based off of the high from July 6th, the high from July 7th, a very key area that we could not get above. Then a couple of days later, we got a very long upper wick, which indicates seller responsiveness. And it's kind of like an imbalance, not so much supply. But if we come back up to test it, we either A, want to see sellers being responsive again and price can move lower, or B, buyers fill in the void, we create demand, and we continue to rally to the upside and have some type of continuation. So the trade that I took on this, we'll go to a 1 minute, was a break above the 293.61 area. Now, I made a video on this in the past. I have been seeing this more often than not, where in the first 5 minutes, we break out of a key level or a breakout above a key supply zone, and we continue to rally. It's just the current theme that the market's giving us. So at 9:34, I played the DOCU 300 calls at $3.25. And at 9:36, 2 minutes later, I sold at $4.20 for a 30% gain in 2 minutes. Now, a couple of key points that we can learn from here is I personally like selling into strength. I had a target of 295 and plus, but because we were so close to the open and because the market was selling off, I wasn't comfortable holding on to a decently large position for too long. So when majority of retail is longing something, I like selling to them because that's when I get the best bang for my buck. And I felt like at 295, a lot of the late longs that were anticipating a higher daybreak would have entered this late. Then we dumped, and this dump is artificial to stop out those weak longs. I'm sure majority did get stopped out on that move up. And then we consolidated, and it kind of lost all momentum and lost all steam. Now, at this point, I'm all out of this trade. I really wasn't too interested because it was showing relative weakness while NQ was rallying. This kind of was just stagnant. Then we got the breakout, and then this thing just had absolutely crazy continuation. And now looking back at this chart, this area right here created demand. So we were creating demand at that same point. We had that upper wick, which like I said earlier is a very bullish sign, and that could have been a good indication to gauge direction to the upside. However, at that point of analyzing the market, I really wasn't too concerned about trading this, and it's not something that I saw in real time. But this did have a crazy rally, and I know by end of day, these went up like 175%. So very nice rally. Simple analysis. All you need is price and volume. Do not hesitate. Take the trade. If it works out, you're going to make money. Detach yourself from the money. Focus on the process. And if it doesn't work out, you respected your risk and that's all you could do. Just focus on the next best setup. The next setup, I did not take this one, was from the pre-market plan. It worked out very well. I know some members did take it. We had demand at 142. We were bouncing off of it, and majority of names like Apple, Facebook, Microsoft are going to be very market dependent. So it's very key to look at ESNQ, which is why I like trading them, to gauge the direction of its underlying equities that make up the market. So I wanted Apple to slice through the 143.20 supply zone and trade above 144 for continuation and filling the gap above. We could look to play calls as long as the market is strong. Now, we were bouncing off this demand zone from yesterday. There really wasn't any commitment. This did have a nice bounce about 10 o'clock Eastern off the demand yesterday for about 2 points, but there really wasn't any strong commitment from buyers. Today we gapped up. We had the help of NQ. We sliced through that supply zone that formed yesterday like it wasn't there. And once we were above the 144 area, we had this slightly shaded box, which was a gap in the daily chart, which was this gap right here that tend to get filled. I normally don't look at gaps because they're kind of irrelevant. However, if we don't have any real upside targets, this could be a good area that gets filled in the void, like we saw that upper wick on DOCU. And this missed the supply zone, the final target at 147 by end of day, but a pretty crazy rally from 144. Facebook from the pre-market plan, we had demand at the 335.38 and 334.29 area. This was similar to Apple, where yesterday we had a demand zone bounce. It was good for calls. However, there really wasn't a true commitment from buyers. They really didn't show any true effort. So today we opened up and we sold off. Now, I missed this trade. Looking back in hindsight, this did have a clean setup because this sold off into demand at the same time NQ came into demand. And this also broke yesterday's low of day, which is a very bullish sign, especially in a demand zone. However, I personally hesitated. It's a human natural flaw to hesitate if you're not comfortable or confident in a setup. And because I was hesitant and this thing started moving against me, I voided my analysis. I did not take the trade because if I chased this and it did not work out, I would have been very upset. And if I chased it, my risk to reward would have been skewed. And if you skew your risk to reward, you're going to take a big loss, especially when you have a high risk after the market moved. So I'd rather have been right on my analysis and not taking the trade than being wrong on my analysis, chasing it, and then this thing reversing, but clean bounce off that demand zone. Microsoft, another good setup from the pre-market plan. Now, this is very important for you to not predict what's going to happen next. Instead, just read what the market's currently telling you and react accordingly. We had a demand zone at 276.50 that if we're above it, I'm bullish. And if we broke below it, I was going to be bearish. Now, this was very key because every time we came into it, example yesterday, we started to not sell off. We traded sideways. And every other time we move into it, we bounce off of it. We bounce off of it. We bounce off of it. So very key area that buyers keep defending. Today we opened up, we wedged at it, but similar analysis. I saw both Facebook and Microsoft doing the same thing at the same time. This did bounce. It continued to make higher lows, also continued to make lower highs. As soon as we broke out of that wedge, this thing did rally. Congrats to the members that did take this trade because it paid out very well. The last trade I want to go over is on SPY. Now, this is a common theme I've been seeing with a lot of new traders is they see the market come up and they try to predict where the top is, especially if we have supply. If the market is in a such strong trend where buyers are relentless or sellers are just not showing up, there is zero reason to try to short the top, even if we have resistance or even if we have supply. Supply zones are just going to serve as areas where if you were long, that you look to take profit to protect yourself. So if we were long, let's just call it down here, we would be looking to take profits at the nearest supply zone up here, and same thing for this one. So if the trend is very strong, wait for the train to pass you off the track, and once it passes, you could get back on and do whatever you want. There's no reason to try to predict and catch the top. Instead, wait for sellers to create supply, wait for a sell-off, and then you could start shorting rallies into that imbalance instead of being the first seller in the market. I could tell you off of experience, taking a lot of losing trades when I first started beginning because I was guessing. If you try to predict the top in a strong market, you are going to get burnt 9.5 out of 10 times. So it's better to avoid this. focus on pullbacks, focus on flags, wait for demand to form, speculate demand to form, and then play it. So very nice all-day runner on SPY. It sucks we missed demand by 3 points, but it happens. There were some other very good setups today. I'm very glad members capitalized on it. I love seeing you all send me your profits, sending me the messages that I get. It's very overwhelming, but I love to see it, knowing that the simple analysis goes a very long way. So I think I'm going to leave it on that note. If you did enjoy this video, drop a thumbs up on it, subscribe to my channel. If you truly want to learn more, I offer a very in-depth and educational course. The link to that will be in the description below. It also includes access to the Discord at no extra cost. And besides that, I think I'm going to end it. Peace out.